far as the diversification model that you hear a lot of firms talk about, I don't believe in any of that. Look at Europe as a perfect example. They don't have a model to grow. They're bureaucratic. I just think it's extremely tough. Why would you invest there? The U.S. is the only game in town, in my opinion. I'm very positive on the economy that President Trump's been creating. These are not happening by chance. These are all orchestrated moves that are basically the opposite of what Joe Biden was doing.
Hello, welcome to the Liberty Spenders podcast. Our guest today is Hal Lambert, who runs Point Bridge Capital, the investment firm he founded and created, the MAGA ETF, the first fund designed to invest in companies based on their support for Republican candidates. He spent 15 years managing portfolios at major firms, little ones like JP Morgan and Credit Suisse, and he's been deeply involved in GOP finance for over a decade. Hal brings a unique front row perspective on where politics and markets intersect. We're really pumped to have Hal on our show today.
Yes. Welcome, Hal.
Thanks for having me.
It's been funny because I realized we've not met or crossed circles before, even though we run in these same lanes. And so we're looking forward to you sharing your insights and other people to learn from you and what you're up to.
Yep. Looking forward to it. I'm surprised we haven't run into each other.
Yeah, who knows? We may have been at some of the same events through the years, but I really think it's fascinating what you're doing because other than sort of understanding, say, how the economy is affected by politics, I've never really thought about investing my money, as you say, where our politics are. How did that idea germinate with you, and what's that look like?
Yeah, I mean, it really started in 2016, 2017, early 2017. I manage money. I have an investment firm. I've done that for a very long time. And I'm sitting at my desk one morning and Target announced that they were going to open their dressing rooms and their bathrooms to whatever gender that you said you were. And that was before the market opened. And I'm listening to this on probably Fox Business or CNBC, and I'm like, wow, that's going to be bad for the stock. And I own the stock. So I sold it that morning. And then, of course, over the next 6 months, the stock is dropping. And, I'm seeing people protest Target. You see people protesting Nike. You see people protesting Disney. And I'm like, these people are protesting that they're not going to shop there or they're not going to go there. They don't realize they own these companies. They own these stocks in their mutual funds and ETFs. And so I'm like, you're not going to shop there. You're going to cause the price of the stock to go down because you're out boycotting. But yet you're losing money because you didn't realize you owned it.
Right.
And so
right. You didn't align that piece also.
Yes.
Yeah. I mean, it's like, you gotta balance that out. If you're going to do it, don't lose money on the other side. So I started thinking about, I was like, well, how can I create something where people could invest, with their political ideology and not be in these companies that are woke? And this was back in 2017. And there was nothing out there. There was literally nothing on the conservative side. I mean, it was all ESG and DEI and socially responsible investing and all these left-wing things. And not a single one. The most that you could say was conservative would be, no sin stocks, but that's more of a Catholic, more of a religious deal. So they're not going to own liquor companies. They're not going to own, beer companies. They're not going to own, certain types of
gambling, porn, anything that's got. Yeah, we've interviewed some people about that. Yeah.
Yeah, so that's really completely different than what this is, because that's just one little category across the board. It doesn't help you with a situation like Target or Nike or Disney. And so I've been in politics a long time. I actually started working in politics kind of, when I say working, I was helping candidates get elected. I wasn't being paid. But I started doing that in about 2006. And, it all comes down to money. All these candidates need money. And so I started thinking about, well, why don't I just look at where these companies are giving their money? Because they all would say kind of lefty stuff. They'd come out publicly and make some virtuous comment about how they're going to do this and that. I'm like, well, why don't I really just look at who they're supporting for office? And so I screened the S&P 500 because that data is public. I screened the S&P 500 for the political contributions of the PACs and the employees of the S&P 500. And it's pretty fascinating. I mean, you can see it. And, it goes from anywhere from, 100% Democrat. Literally, many of the tech companies were 100% Democrat. Not a single person had given to a Republican federal candidate. And then on the other side, you've got Republican side, which was, at the highest end would be maybe 90% Republican. Those were typically oil and gas companies. And so I said, well, let me look at this. I'm going to screen it for total dollars. I'm going to screen it for the net difference, because a lot of people may say, hey, they give to both sides. Well, in most cases they do, but there's a big difference too. And when I looked at it, I decided, coming from a portfolio manager background, I wanted to create a portfolio that didn't blow up. That people, they didn't walk in one day and they lost a bunch of money. So I designed it where it would be diversified enough. I went with 150 stocks, equally weighted. So it's not market cap weighted like the S&P 500 is. It's equally weighted. And I just took the top Republican supporting companies. I had some other rules in there, but it's rules based. So it's not me deciding, hey, this company's conservative or not conservative. The data is following what they're doing. And it was really fascinating. You end up with very little technology. It's heavily in industrials. It's heavy in financials. It's heavy in utilities and oil and gas. And so that's what I did. And I launched it in 2017, in September. So it was right during Trump's first term. I got a great ticker. The ticker is MAGA. So it's very easy for people to remember. And it's called the Point Bridge America First ETF. But that's how the idea started. So I'll just kind of pause there and see what your thoughts are on that. But that was the gist of it.
Well, it's fascinating. What's the feedback been? That's a unique approach. What's the feedback been from investors? I know it's hard in this space. You can't promise results or anything, but what's the experience been like?
I haven't found anybody that thought it was a bad idea. People like the idea. There's now been some copycats since then. There's a Democrat one out there that's kind of using the same methodology, but very concentrated. It's like 40 or 50 stocks. And then there's some others that have come out. As we know, Vivek launched a group that was anti-ESG.
Yes.
So those are all kind of years after what I did. But no, people find it refreshing, and people love the fact that they can invest money and have their money being invested with companies that share their political ideology.
Well, and it's no shocker to us. I mean, that was the trend that we were seeing in terms of, consumers switching brands and who they were buying from and the business they wanted to support. And so it completely makes sense to help everyone align their investments as well. And to your point, we've interviewed a number of people who are doing that in their own way. And you've taken this other approach, which I think is amazing and great for people to know about. Because, again, when you think about why would you want to give your money to companies that turn right around and work against what you believe in and what you stand for, right? And so that's a big part of what we preach here and what we help people to do is to think about that in your choices of the businesses you're supporting and even down to your investments.
Yeah, and people may say, well, how does it perform in different environments and that kind of thing?
Right.
It's done well. I mean, the last 5 years, it's compounded over 13% a year. Since inception, it's almost 11% a year compounded. So you're not giving up. Getting positive returns, because you're in this. These are all great American companies. They're large companies. You're looking at companies like Caterpillar. You're looking at companies like John Deere. You're looking at companies like Tesla's in there now. So with Elon Musk having gotten on board. So when I did my rebalance this last time, Tesla got added. So it's, I think there's a lot of opportunity there. These companies are solid companies. And I think people, if they're really interested in looking at, by the way, the website on it's investpolitically.com. So they can check it out there. There's a lot of information there on it. So there's more information for people. But, I was originally called on as soon as I filed that S1, I think it was, to launch it, with the ticker being MAGA. I got a call from Stuart Varney's, show saying, hey, we want you to come on. So I've started doing television. I've been doing television now since 2016, really. And so I go on quite a bit. I don't always talk about this particular product, but it's certainly been picked up and well received by the media as well. At least the conservative media.
Yeah.
So is this the kind of thing a retail investor can log into their Schwab account and say, I want to get this MAGA ETF?
Absolutely. So you can buy it. So you don't have to have an account with me at all. You can, if you have a Fidelity or Schwab or any kind of account like that, you can do it. There's a couple of firms out there like Merrill Lynch, I will call them out, that have not turned this ticker on. There's a number of reasons why. I won't go into necessarily all the reasons, but it's more of you need to be doing business with Merrill Lynch for them to turn your ticker on. Let's just call it that. So there's some places that they may call their broker and go, hey, I want to buy this. And they go, hey, we can't buy it. But if you're doing anything self-directed or at just kind of normal brokerage firms, it's turned on. You can buy it.
Yeah, it's exciting. What's been the biggest surprise for you since you launched it?
Well, it's interesting. I guess some of the bigger surprises have been, one of the things that I would say is it compares to like the S&P 500. The S&P is almost 40%. It's about 40% in about 7 or 8 stocks. So when you're in the S&P, you're basically in those stocks. And if the S&P goes down, it's going to be because those stocks go down. We don't own any of those stocks. So, this held up really, really well in 2022 when we had a big down market in the market. This was basically flat to slightly up. And I think the S&P that year was down over 20%. So it did what I wanted it to do. And I think a lot of people, look, I don't have a problem investing in tech stocks at all, even though they're 100% Democrat, so to speak. But a lot of people are overweight tech stocks already. So if you're looking for something that's different than that, and you're looking for opportunities around that, this is a good option for you. But if you're also one of those people that says, you know what, I think Facebook's evil, I think Google's evil, I don't want to be in those companies, you're not going to have those in this portfolio. At least until they start giving a lot of money to Republicans, and I don't see that happening.
Right.
Well, that may mean this is a bit of a diversification play in that respect, right?
It is. I would say it is, yeah.
Yeah. At one point or another, and I'm no professional wealth advisor, I had become aware that so much of the growth in the market was coming from these sort of alphabet type companies, Google, Apple, and Meta. And so everybody's overweight those stocks, right? And they were driving
NVIDIA. I mean, now it's like, you've got
growth. And so you get a slightly different type of portfolio with this kind of investment.
That's right. No, and so I would put this portfolio more in the value category. I consider it more of a value portfolio because again, it's very heavy in industrials. It's about 20% in industrials. It's about 16% in financials and 12% energy and 10% utilities. So it's to me, if you think about positioning, for AI and those things, you've got a tech component to that, but you also have an infrastructure component of that because you got to build out these data centers, which is a Caterpillar play. You've got energy needs, which is a Constellation Energy play. You've got, financials have to finance this stuff. So it's, I think it participates without being directly associated with one particular AI company, let's say Google.
If you're listening to this show, it's probably because you understand something most people don't. Marketing to Liberty Spenders isn't just about ads or tactics, it's about trust. And in the real world, trust moves through relationships. And that's why private introductions and deal flow are such a core part of what we do.
So FastPass is a private introduction and deal flow network for Christian and conservative leaders who already have influence and want to scale fast. It's not open networking, it's intentional introductions between people who already share alignment. We've seen one client land a $25,000 opportunity from a single introduction. Another told us that FastPass has become his largest source of referrals, not because of volume, but because of fit. And yet another closed her equity round at a key moment just due to the right introduction.
When you book a one-to-one consult with us, we're not handing you a list or making big promises. Instead, we're having a real conversation about what you're building, who you want to meet, and whether FastPass makes sense for this season for you. So no pressure, no hustle, and no awkward pitch from us.
Yeah. If you're ready to grow through relationships instead of forcing everything on your own, head to libertyspenders.com/FastPass and book a one-to-one consult with us.
In worst case, you leave with clarity. Best case, the right introductions change the trajectory of what you're building.
Okay, back to the episode.
Well, I think it's I think it's fascinating again. And, we were talking about this just a little bit before you got on, but, being involved in all this sort of gives you a front row seat to be thinking about where politics and markets meet. Soon, just before we recorded, maybe a week or 2 weeks, we have Trump intervening in Venezuela. We've got protests in Iran that look like they may hold much more so than some previous. We've got all this sort of commentary going on over Greenland. How do you see that kind of new world order, if you will, affecting the market or changing the way investors should be thinking about things?
Well, I guess a couple of comments on that, just to start with the market side of it. I have been a U.S.-focused investor now for at least 15 years. I worked at a couple of Wall Street firms, as you mentioned. They're very much about, hey, you need to have, 15 to 20% in international. You need to have emerging markets. You need to have, as far as the diversification model that you hear a lot of firms talk about, I don't believe in any of that. Okay. And the reason is because look at Europe as a perfect example. Everyone always says, oh, it's undervalued. It's been undervalued. It's been undervalued for 25 years. Okay. When they launched the EU, their GDP was close to slightly above the United States. They're now half the United States. Okay. Over that period of time. So they haven't grown. They don't have a model to grow. They have a socialistic type model in the European Union. They're governed. They're bureaucratic. I just think it's extremely tough. And so why would you invest, in my opinion, why would you invest there? Latin America is very difficult. The U.S. is the only game in town, in my opinion. And so then when you tie that with what President Trump is doing, you look at he's effectively, there's a new world order clearly taking place and taking shape here. Some people may hate it, but it's happening. And so when you look at Venezuela as an example, that decision, yes, it was about oil, but it wasn't so much that the United States isn't stealing their oil. That's what you hear Democratic commentators say, Democratic elected officials say, oh, we're stealing Venezuela's oil. No, we're not. We don't need Venezuela's oil. What we're doing is we're stopping China from getting Venezuela's oil. That's what we're doing. That's the reason for that decision. And if you look at what's happening in Iran, same thing. Iran ships to China. That's a play on that as well. Greenland, that's about Russia and China and the Arctic. So this is all about a new world order where we have to get serious about the threat that the Chinese have. Now, the downside, if you want to say there's a downside, is, okay, we're saying that we're going to control this hemisphere. That's what President Trump has said. We're not going to let China and Russia come in here into this hemisphere and do things. Well, you could then say, okay, then what about Ukraine? That's right on Russia's border. Should we be involved in Ukraine? If we're going to have the doctrine that we're going to control our hemisphere, can they not even control their border next to them? So there is that aspect of it. And that's something that is, really what's happening here is NATO is becoming weaker, over all of this, because the United States is NATO, right? I mean, we defend NATO. And so, when you're looking at what happens with NATO, if things play out, well, you've got Greenland, which is, technically part of Denmark right now, a NATO ally. If we're gonna start basically disregarding some of the historic norms because of the big threat that's out there, which is namely China, it creates a new atmosphere when it comes to what we're doing. And I think that's why President Trump has announced $1.5 trillion that he wants to spend on defense, up from $1 trillion. And by the way, that's still well below, as a percentage of GDP, well below historical norms on what we spend on defense. So it's, most people don't realize that $1 trillion, on a $30 trillion economy, as a percentage of GDP is pretty low, although it sounds very high. But historically, it's a low percentage. So I think Trump's looking at this on a long-term basis, and he's looking at it directly at China.
Mm-hmm. There was some mention of that. We were, like a lot of Americans, not expecting us to depose Maduro. Probably deserves it, and it seems like an awful human being who's oppressed his people. So good riddance. Absolutely.
Yeah.
But I respected the sort of international politics that were happening. It's hard. You've got to be thinking in big, broad terms as a president of the United States when it comes to our foreign policy. And there was a lot of
debate about that.
Yeah, a lot about that move that I liked because of that. Also has some impact, I think, on Russia as well, which we have to keep an eye on. But absolutely going to affect the way we think about investing. And again, in a few weeks, we may have seen things have changed quite a bit, and how that and what Trump is up to.
Right.
Yeah, it definitely, obviously it causes you have to evaluate oil as an example. What are energy prices going to be if once Venezuelan crude gets more online, and it's obviously going to come to the United States and be processed here. We have the refineries set up for it. And by the way, just so everyone knows, we drilled those oil. We drilled all that. It was our technology. It was us and the British, but it was America mostly. So when we talk about we're stealing Venezuela oil, look, they stole it from U.S. companies to start with. Chavez stole all those resources and took them over. They didn't pay for those resources, and then they've just let them deteriorate because they don't manage them.
I was going to say that's been the big issue, right? Is it's really gone down.
It's really gone down, and so they don't manage it properly, and then they turn around and they're selling it illegally, to Russia and other places. So it's something that I think Trump looked at, and by the way, everyone agreed that Maduro had to go. You have 8 million people displaced. You had people starving in a country that's extremely wealthy from a resources standpoint. So, I think he finally just said, you know what? I'm done with this kind of nonsense. Same thing with Iran. He took out their nuclear facility over there. Hopefully, Iran will be able to move towards, getting away from the mullahs.
Yeah.
But that's to be determined. But the facts are that Trump's looking out there going, what is in the America's interest? What helps us strategically when it comes to China? Because they're the main ones. And, it's going to be hard to invade Taiwan if you don't have any energy. And China, as a country, only has coal. They don't have oil and gas. So it gets a little difficult to do things and operate if you're not getting oil. Yeah.
Well, and I think what's been interesting on that, again, I do not pretend to be experts at this level, but it's been really great for me just educating myself and reading a lot and trying to think about it and recognize, we've known this. Anybody knows that China does not play fair. We know about how they rip off IP. We know that they threaten and intimidate other companies in other countries. And then just hearing about how they were controlling and getting some of these resources, right? Because of making specific deals and getting it at below market. And so when you start thinking about that, it is important, this geopolitical worldview, and how that affects what happens here in the U.S.
Yeah. And, to just briefly cover Greenland a little bit, Greenland, it's up there in the Arctic. That's where, we've got assets on Greenland right now, military assets, and we can't afford to have that country effectively subverted and controlled and claimed by Russia or China. They just can't do it. And Denmark doesn't have a military to defend it. So what does that mean? Oh, okay, well, they're part of NATO, which means NATO will take over. What's that mean? That means the United States. So it's at the end of the day, it's like they want us to defend Greenland, but yet they don't want us to be able to have, more military assets and actually control more of the destiny of Greenland. We just have to sit back and guarantee defenses for it.
Yeah, it's such a interesting geopolitical situation. We're also coming, again, people might be hearing this in a couple of weeks, but we're coming out of 2025, which was an interesting year for investors, but stock market gains around 17% in 2025. What do you think was creating that kind of momentum? What's maybe the biggest wins you've seen under this administration?
Well, there's quite a bit. Passing those permanent tax cuts was big. People could then plan around that. You're having deregulation going on now, so a lot of deregulation. People don't realize Biden in his last year of his administration, just in the last year, put on over $1 trillion of new regulations. Like,
Wow.
this is just insane regulatory nonsense. The SEC was completely out of control. They were just on the cusp of making every public company report their carbon emissions every quarter. I mean, talk about nightmare costs and scenarios. And by the way, if you're off on that, then the shareholders are going to sue you. And oh, by the way, if your carbon footprint's higher, they're going to sue you for that too. I mean, this was just a plaintiff's dream to sue public companies, which, by the way, is also another problem, right? We don't have a lot of companies going public because the costs are extreme. The regulatory costs are too high. So I think that's going to be coming down. Those regulatory costs are going to be beneficial for the market. I've never had a problem with the tariffs. I think the tariff revenue is, it's looked like it's going to be probably $300 billion a year. It hasn't caused any inflation so far. In fact, inflation's been flat to slightly down. And so, people don't think about it from the standpoint of, if you put tariffs on China, China's not a free market, right? So they can step in and go, listen, don't move your manufacturing. We will lower the cost so that your net at the end of the day is the same as it was. So effectively, they pay the tariffs. Now, that doesn't happen in every case. I'm not saying that. I'm just saying that in certain cases, that is the case. So when they say that the consumer pays the tariff, that's not accurate. And so, I think the tariffs have been a positive. So if you combine that with lower interest rates, which is where I think we're headed, we'll get a new Fed chair at some point here this year, and we're going to get lower interest rates. That's going to cut the interest costs off of our debt, hundreds of billions of dollars. So you could see interest costs on our debt go down, which we will. You're going to see the tariff revenue come in. You're going to see GDP growth, which we just saw at over 4.3% in the last quarter. All of those things mean more revenues to the federal government, which means you have lower deficits. It should continue to create kind of an effect where you have, lower interest rates, lower inflation, lower gas prices. Trump's very focused on getting that done. That's happened. I'm very positive on the economy that President Trump's been creating, and it's all these are not happening by chance. These are all orchestrated moves that are basically the opposite of what Joe Biden was doing.
Well, yeah, that's for sure.
Yeah. How do you think, and you mentioned some of the impacts on 2025, things like tariffs. What do you see if you put out your crystal ball for the next few years?
I see deficits ultimately coming down. This first year, 2025, I think they were down about 15% for 2025. The annual deficit that we get. But what people aren't talking about, the GDP went up by $1.5 trillion. So you're going to see. I think you're going to see higher GDP growth. You're going to see higher tax revenues because of that. And so I think that's going to create a situation where the dollar will do better. Interest will do better. And I think consumers will be better off. I feel really positive about the economy overall. And gold's been going up. A lot of that has to do with the expectation of lower interest rates. And I don't want to get into a whole gold thing, but I do think gold continues to probably go higher as well.
Well,
we have some friends in that space who've been very happy.
Yes, the gold bugs
one of our neighbors has been very happy.
Yes. Yeah. Well, looking ahead, maybe this is more of a conservative principle question. What excites you most about the intersection of conservative principles and Trump's agenda and other opportunities that might come from that?
What excites me about it? I think what excites me the most is that I do think that as a country, I think over the next year, people are going to come to the realization that, the United States is the leader on these very important issues globally. Right now, you've got countries overseas that are mad. There's a lot of anger, I think, out there towards the United States, but a lot of that is because President Trump stepped in and said, look, you guys have to pay your fair share on defense. You have to stop, this mass immigration that you've just opened your borders to, and you've got to change your ways. And the elites in those countries don't like to hear that. But I think as time goes on, you're going to see the United States continue to grow, continue better. And obviously, AI is going to be a very important technology. I do feel like the United States is going to win that. We've got, the talent, and we've got the energy, and we've got the ability to do it. So I think we will win that. And you listen to someone like Elon talk about what that means to the average person. Well, if he's even close to right, that means the average person in the United States is going to be a lot better off with these opportunities in the country, because we're going to have such faster growth economically, and it should benefit everybody, I would think.
Yeah, I know it's got a lot of people scared because anything that's unknown and uncertain, right, it can strike fear for a lot of people. And I was happy to see the president, speak out about what a lot of people are concerned about related to energy prices, right? These companies and people that are trying to build the data centers and then pass on the cost, and that's been a hot concern for a number of people. And so I think that'll be interesting. And we've also interviewed some people on this podcast who are very involved in that process and looking at innovative ways to add to our energy supply and try to be really innovative into how they do that to manage those costs and to scale up faster. Because I think when I talk to people in this, that's the greatest concern, right? Is there's this battle, and China's beating us right now in their ability because they can control, right? They're, like you said, it's not a free market. It's not, they can just decide, hey, we're doing this, and we're going to increase these resources and build a data center. So it'll be important that we keep that up.
Yeah, no, that's right. And I think we'll get it together. And, there's a lot of smart people out there working on nuclear, where it's actually at the location of the data centers. So it's these small little nuclear reactors that are solely there to power that data center. So there's just a lot of innovation that's going on. And there's a lot of, I'm very involved in defense technology companies, early stage. I do a lot of venture capital in that. I think that's a great space in general. And, as President Trump announced, wants $1.5 trillion for defense, and he also wants, faster, better technology. And that's hard to do at the giant primes, the General Dynamics, the Raytheons, the Northrop Grummans. They don't move as fast, but you've got a lot of smaller companies out there that are moving.
Exactly.
Yeah. I think this has been really powerful. And now we want to get into our lightning round. So first question, maybe a little more serious than what we've been hitting on lately. We like to ask people, as you're, hopefully 50, 60, 70 years from now in your bed, looking back on your life, how do you know you've lived a life well lived and established a good legacy for yourself?
Well, it's a good question. I want to make a difference for the country, and I'm trying to do it in multiple ways. I'm doing it from the investment side with the politically responsible investing that I have. I'm doing it also with defense technology and trying to put resources behind that. And then I'm very active politically to try to get the right candidates into office. So I'm on media quite a bit. I'm had my voice out there quite a bit. I'm doing a lot of CNN these days. Surprisingly, CNN.
Give it to them.
CNN's finally having conservatives on these programs to try to have another side, at least a couple of the programs. But I think if I can move the dialogue and I've been first at a number of things. I was really the first on politically responsible investing and doing that. I think there's going to be some opportunities to be first on some other things as well. But I think if I can just alert the country, I was very focused on Institutional Shareholder Services, ISS, which is a proxy voting firm that is owned by the Germans, quite frankly. And finally, people are coming alive on that. As far as what that means to our country. But I think if I can just kind of make people alert to what the real problems are, and then try to fix those, that's what I want people to remember me by is having done my part to change things.
Yeah. Well, now we want to do a big pivot. So we like to invite every guest to take some time on a topic that's been interesting them lately. It just needs to be off topic of the podcast. So nothing investing related. Do you have a sports team you're a super fan of, a hobby that you're into, a great book you've read? Give us a passionate
What's been
description
capturing your imagination?
Well, I like sports to some degree. I'm a UT Austin college football fan, so I
Sure.
went there. I like the Longhorns. So for all you Aggies out there, I'm sorry about that, but I was at the A&M game. I know it was a very sad day for them, but no, one thing I've kind of started getting into personally is kind of on health things, and I just signed up with and this came from a friend of mine that had recommended it, but there's some newer technology out there where they can scan your heart, and they use AI to tell you like what your problems are with your heart, and it's very different than say an EKG or some of the standard methods where they're looking at your arteries to see if your arteries are blocked. Actually, some of the highest risk, or your arteries are not blocked, but there's buildup on the outside of your arteries that then break through and can cause heart attacks. So I've done that scan. I'm talking to a cardiologist, but I find the whole healthcare space on a personal level, not investing wise. I'm not going to invest in the healthcare space from that standpoint. I think there's the technology there over the next 5 years is just going to so massively change outcomes. And I think learning about that and staying on top of that, I think everybody could benefit from that, because there's a lot of technology that's going to be coming online that I think is, heart disease is something that kills more people than cancer. It kills way more people. And I think our ability to find it and correct it early is pretty outdated. Most of the time it's after someone's had a heart attack. Then they go, oh, you need all these bypass, you need all these stents, you need all these things. That was 10 years after what they should have learned, previously, right? So,
right.
I think it's going to be interesting. You see Elon talk about if you can live another 10 years, you might live another 30, right? Or wait,
right. That's 100%. Just because we're on that cusp, and you've hit on something, because I've been so passionately trying to learn about this and stay up to date, and I've been really inspired. And it really gets exciting. And there's some amazing leaders in the space. A lot of people listen to people like Gary Brecka or Dave Asprey, and we've been involved in Tony Robbins' community for a number of years, and just getting more exposed to what he's investing in, looking at Peter Diamandis. I mean, the longevity space is just so fascinating. And so that's one area where, for anyone who's worried about what all this AI stuff means, I try to point them to, yes, and look at the leaps we'll gain in terms of health and wellness. And so you're 100% right, because the things that are being developed there are truly remarkable.
We did a series of those scans in late 2023 with a company in Houston called Advanced Longevity that I would highly recommend. Yes. It was very comprehensive.
Great.
Heart, MRI, whole host of things. And that scan showed me just a minor issue, nothing to be too worried about, but just something that I knew I had some discomfort. I didn't know what it was. And I had I not gotten those scans, I probably would have gone for another year or so before really figuring out that I needed a small procedure done. And because I got those scans, I was able to book that procedure just, a few weeks after. And I got the whole thing fixed before it was any big deal. Doctor said it was the quickest one he'd done, in and out. So I'm a big fan of those kind of early detection health procedures.
Yeah. And one of the things I learned was, certain cholesterol, not all, but certain cholesterol is bad for you. But if you don't have certain things on your arteries, you can have high cholesterol. So it's one of those things where, like, some people may be on cholesterol medicine that don't need to be. And then there's others that should be that aren't. So I just think, as people learn about these things and our technology gets better and better and better, I think there's going to be a tremendous opportunity to not just live longer, but you want to live longer and not be, incapacitated.
Right.
You want to be.
It's right.
It's about being healthy and living longer.
Have vitality, have energy, right? Those things matter. Energy. Yeah.
Absolutely.
Yeah.
So the last thing we do in our rapid fire section is we'd like to invite people to pretend no one has heard the previous 35 minutes of this episode. And what do you do? Who should be working with you? How do they find you?
Perfect. So what I'd say is, my ETF is designed to allow people to invest based on a conservative Republican political ideology. I'm selecting stocks of companies in the United States only who the majority of their political contributions go to help Republicans get elected. We're talking about millions of dollars of difference in funding. I also, by the way, have an extra screen on there. I didn't mention that the majority of the assets of the companies have to be in the United States. I wanted it to be employees needed to be employed in the United States, but they don't have to report that, and many people don't. So I'm using assets as a proxy. But those are the screens. These are all some of the top companies in the United States. You can buy this, and I think feel comfortable that it's diversified enough. It's 150 stocks, equally weighted. Again, all U.S. based. It's been around now since 2017. You can see the performance at investpolitically.com, which is the ETF website. It's compounded at over almost 11% a year since I founded it, over 13% a year over the last 5 years. So it's done well for people. I think it's a good opportunity for people to invest that are maybe already heavily weighted in tech because there's very little tech in this. And this was all designed because people were upset with corporate America funding left-wing causes and doing things that were not politically aligned with them, and they may not want to shop there. They may not want to go to Disneyland, but they also need to realize they shouldn't own those stocks too, because if they're not going to give them their money, the stocks go down, and so you need to avoid that if you can. This is an opportunity to do that. So you can buy it if you have a Schwab account, a Fidelity account, TD Ameritrade. You can buy it pretty much anywhere. There's a few places that won't sell it to you, but if that's the case, just figure out another place to do it. So
maybe that's a sign to.
Robinhood's the one I was thinking.
Oh, okay,
you can buy it at Robin. You can buy it at Robinhood too.
Okay,
that's awesome.
I love it. I think it's a smart idea, and I think for people, check it out. We're not giving you financial advice here. Check it out. Talk to your advisor. But what I think is truly amazing is just, again, encouraging people, as we do every chance we get, to think about how aligned you are. Think about ways that you can make an impact without even spending any more. Right, where you shop, where you invest.
Yeah, very powerful. Yeah. And for people who have listened and they're very interested, I will mention the domain again, investpolitically.com. You can also find Hal on LinkedIn. His company, Point Bridge Capital, is there. Also on Facebook. He's also on X.com under the handle MAGA Index.
You can follow that.
So you can find all sorts of ways to get a hold of Hal or just to check out what he's up to. I think it's really cool what you're doing, and will have a positive impact on the U.S. quite a bit.
Mm-hmm.
Well, thank you. I appreciate that.
Well, thanks for spending some of your time. We're not CNN here, but, I really appreciate it. And we're excited to get this out to folks.
If I knew it wasn't CNN, otherwise I'd be getting yelled at.
Right.
Questions are more hostile.
That's exactly right. I tell you, we can't all be Scott Jennings over there. He is fantastic.
I was just on with him last week.
Is that right?
Yeah.
Oh, he's so fantastic. Anyway.
Yeah, he is. I still remember, he used to, he worked for Mitch McConnell down in Kentucky, and he had an office there in Louisville. I remember going to meet with him once, and he introduced to me the concept of the standing desk with a treadmill.
Is that right?
So he had this first? Yeah, he had this big, tall desk, and he had a treadmill he was walking. I was there to meet with one of his colleagues. I should have taken his lead. Unfortunately, I didn't. But
I should get one of those because I tend to pace when I talk on the phone. So
yes,
a treadmill would be easier.
Yeah, you're not wearing out your carpet. We have worn down little sections where he paces.
Yes, that's true.
But anyway, we just really appreciate you spending some time with us, Hal, and sharing your wisdom. And I think, educated a lot of people. And so thanks for providing that value. And for those of you listening, we know your time is precious. Thank you for spending some time with us. If you found value in today's episode, don't forget to like and subscribe so you don't miss anything in the future. Until next time, guys.